Hey everyone, and welcome to our latest market update video where we help you understand what's happening in the DC metro real estate market so you can make wise real estate decisions to get further faster in life. Let's take a look at the latest numbers.
Throughout the DC area, the average number of active listings is rising. The problem is it's still below the number we need to meet buyer demand. What we need is an increase in new listings on the market, and the number of new listings coming is increasing and appears to be close to pre-pandemic levels. But the continued strong buyer demand for townhouses and single-family homes shows us that we need excess inventory to really stabilize the market. For those properties that did come on the market, the average number of days it took to sell remains very low at 15 days for single families and about 25 days for condos. The rise of inventory and days on the market is causing the market to cool, as you can see in this chart where the average sales price is starting to decline off of its peak of early in 2021.
Thanks, Reagan. You know, one of the questions we are getting is, are we heading back into a more normal market? The question is, what is normal? Webster's defines normal as conforming to a type, standard, or regular pattern characterized by that which is considered usual, typical, or routine. So Tim and I want to take a moment to explain to you why today's market is anything but normal. And the first topic is mortgage rates, because that's really what's fueled the demand over the past year. If you start to look at rates by decade, for 30 years, 8% was not considered a very high rate. In the worst of times, it was 10% to 15%. Today, rates sit at 2.87% on the average 30-year fixed. This is extremely low. It is the instability in the world, starting with the Great Recession and then into COVID, that has given us these low rates for the past 10 years. And these things are anything but normal. Next thing that we want to look at is home price appreciation. If you look at home price appreciation by the year, we were at 14% year over year throughout the US this year. The red bars there in the middle were the years where we saw depreciation in the market during the Great Recession. But average appreciation over the past 25 years, including the Great Recession, is 4.1%. Now it's interesting that the average appreciation has typically been quoted at 3.8%. However, the last couple years of 10+% appreciation has raised that up to 4.1%. If we expect that to go back to 3.8%, then we're going to need to see depreciation or years of lower appreciation. Months of inventory of supply have been the biggest issue in housing, no doubt, over the past year. Historically, 6 months of supply is associated with a moderate price appreciation, and a lower level of months supply tends to push up prices more rapidly. So where do we sit today? 2.6 months of supply on the market. That's anything but normal. We need more homes on this market to stabilize the market.
The fourth non-normal market factor is the number of days it takes to sell a home. This summer, at the peak of the market, it took 17 days to sell a home. Now, as Reagan previously mentioned, the number of days it takes to sell is increasing, but going back to March of 2019, you see numbers in the 30s and 40s. Think about that. A month and a half to sell a home is not an unrealistic time frame, but 17 days, that is a quick turnaround and anything but normal. The last factor is the average number of offers on a listing. Typically, we've seen that range around a couple of offers on the average listing according to NAR. But this summer, we were at 4.5 per house, well above the normal. Now, that demand was abnormal. But what does the future hold? We're constantly looking at home appreciation predictions, and the sources we are listening to forecast an average appreciation of 5.5% for 2022. And while no one knows for sure, we highlight this because some people are feeling that prices are rising too fast for them right now, and they're going to wait until next year when things cool off a bit. And the problem with that is that these sources predict that if you wait, it will cost you more. Now, we're going to be here as long as you need us, whenever you're ready, whether it's a year from now or 10 years from now. But we do want you to see how good these interest rates are in the context of history and how now is a great time to buy a home if you can stay in it for the long term. Because with these low interest rates, so much of your monthly payment is going towards paying off the principal and not just paying the interest on what you've borrowed. So here's a question. Will the market fall in the future? You know what? At some point, we will have another pullback. But remember that even with the Great Recession, the average appreciation has been 4% over the past 25 years. You know, with real estate, we think about the long term. So, if you're thinking about buying, selling, the market is strong. If you're concerned about a pullback, this may be a great time to sell an investment home or vacation home to insulate yourselves from fluctuations. I don't know that buying a condo right now is the best move if you are looking for the short term, but if you're looking for an investment, it might be a great opportunity. Real estate, though, is also a great hedge against inflation, which we're hearing a lot about. So there's a lot to consider there. And if you have questions about buying or selling, I'll offer you this free home buyer and seller guide that provides a ton of information on the process. You can click on the link to download it now. We know everyone's situation is different, and we want to serve you and the people that you care about as your trusted advisors. And we can help craft a plan to help you use real estate to achieve your long-term personal and financial goals. So, if you have any questions about buying, selling, building, or investing anytime now or in the future, give us a call today. We are always here to help you and the people that you care about. So until next month, stay well and God bless.